Welcome to Pulling Chain, the blockchain distributed ledger cryptocurrency news channel for the capital markets industry. I'm Steve Edge. So MiFID is set to go live someday. Well, January 3rd, 2018, or in about 13 months. It has been a hugely exhaustive process for the industry who invariably have had to pay for it. The goal of the regulations are intended to protect end users and expand transparency where participants will see a large increase in reporting to regulators and accountability to users. So I wanted to see what parts of blockchain could support the process despite regulations being light years from enabling this technology, maybe in MiFID 3. If we look at blockchain's simplest definition, it's a database of chronological transactions with exact duplicates held by several stakeholders that can only be added to if most of the stakeholders agree to add to it. The database, or the blockchain, can't be deleted or historical transactions altered. So based on this, there is clearly an auditable record that everyone agrees occurred. So this ticks the transparency box, the audit box, the reporting box, and should tick the accountability to users box as well. So for a hacker to alter records, she would have to alter all of the stakeholders' copies of the database for it to succeed, and that would range in the thousands. So that's not very likely. Ticking off the security box too. So at the top level, it's really an ideal solution for MiFID 2 compliance, but how do you teach an old bank to learn new tricks? So is there any money to invest in a project like this, or has complying with MiFID drained budgets and talent away from this viable solution? You probably saw that in June, ESMA did call for comments on its consultation on distributed ledger technology. There were 59 responses to it, and some of them not by the traditional financial firms we've all come to know. I'll put a link below so you can see for yourself what the industry is saying about blockchain in Europe. I think that in order for the industry to benefit, they will all have to come together. Buy side, sell side, exchanges, clearinghouses, regulators, and agree to a roadmap. That, of course, is not a small task. T2S Securities rollout is underway, and 13 months till MiFID compliance is on everyone's plate right now. But in the short term, there will be pockets of blockchain implementations here and there, and their success will be crucial to its wider adoption. Will first mover adoption provide a competitive advantage? Maybe, but I think all participants need to be involved to get blockchain right the first time. Well, as blockchain and cryptocurrencies keep gaining more and more acceptance, participants are asking for price data, and if you saw the news last week, Tullet Prebon Information will start publishing data on more than 50 digital currencies in partnership with Brave New Coin, a digital currency data provider. I bet you didn't even know there were 50 digital currencies out there in the first place. Well, nothing like more data for the IT departments. While it does continue to highlight crypto acceptance, we are likely going to see historical data sales, reference information, and algo development, to name a few. Another product Brave New Coin offers is the Bitcoin Liquid Index, or the BLX. The index calculates a US dollar price point for one Bitcoin at tick intervals of 30 seconds, according to BNC's website. The index data is aggregated from 11 exchanges, including one from BTCC in China. There's a daily VWAP and TWAP rounded to 8 decimal places, or 1 Satoshi. And after the ICAP acquisition, I'm betting TPI will start dealing in cryptocurrencies and BTC options. Maybe even Optiva will be making the market for those. The Ontario Securities Commission, Ontario's capital markets regulator in Canada, has announced they are looking for applicants for a newly established FinTech Advisory Committee. The committee will advise staff of the OSC's Launchpad program. The program will support eligible FinTech businesses to navigate regulation. Ontario is the only provincial regulator offering this kind of program, so if you want to be a part of Ontario's FinTech Advisory, get your application in. Well, the Nikkei Asia Review reported that Japan's Daihua will adopt blockchain for Myanmar stock trading. The group is negotiating with the Myanmar government to bring a trading infrastructure to that country. Well, this is quite an interesting testbed for the blockchain and market infrastructure. The Yangon Stock Exchange only matches orders twice per day at 11 a.m. and 1 p.m. There are just 5 brokers, and electric power in that country isn't very stable either. So if they can develop a workable model in those conditions, building on the success will be easy, portable, and scalable too. They could build a fully immutable blockchain with T+0 settlement, no trade breaks, and true STP. Can you imagine? Well, speaking of Japan, last week we talked about SBI Holdings and Ripple. Though it does fall under payments rather than trading, I thought worth mentioning that 42 banks have formed a consortium. Underpinned by the Ripple blockchain, the group will start looking at payments using this technology locally and abroad. They expect to have a proof of concept in place by next March 2017, and Daihua, as we previously mentioned, is part of this consortium as well. And on the topic of Ripple, CEO Chris Larsen is stepping down, saying that he wants to spend more time with his family. Brad Garlinghouse will step in next January. He's ex-AOL and Yahoo. Well, that's all for this week. Don't forget to subscribe to the YouTube channel, leave some comments below, or send me an email. You can find me on LinkedIn, and that link is below as well. Enjoy the rest of your day. For Pulling Chain, I'm Steve Edge.